Today's question is from Pete Sweet. Why can't I buy a car before applying for a home loan? And if that's true, what's the time span of how long I need to wait? There's no law that says you can't buy a car before you apply for a home loan, but it's typically a bad idea. One of the things that's very important in qualifying for a home loan is something known as your debt ratio, which is a comparison between the amount of debt you have, the outflow of cash to service your debt every month, to the inflow of your income. And the higher that debt ratio is, the worse. So if you're financing it, you're increasing your outflow of cash towards debt. You're increasing your debt ratio. That's not a good thing. Now, of course, if you make a ton of money and you're buying a car that does not really doesn't affect your debt ratio, and you do it before the application process, that's not a big deal. Your debt ratio is probably fine. If you're really tight, between debts and income, it's really usually a bad idea. It is a really bad idea to buy a car during the loan process. That's the big thing that you really don't want to do. We're trying to close a loan. We're giving to the underwriters a snapshot of your financial health. We're telling them what your income is, what your assets are, and what your debts are. Well, when you buy a car, let's say you buy it with just cash. Well, you've lowered your assets, the assets that we reported. If you do a combination of a down payment and financing, you've lowered your assets, you've increased your debt ratio. Oh, and by the way, you had your credit run. And anytime you run your credit, you're running the risk of lowering your credit score. So it's a very bad idea to do really anything credit-wise during the loan process. Anyway, thanks, Pete, for today's question. And if you have any questions, put them down in the comments. Please hit subscribe, and look forward to talking to you in the next video.